India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, so I think it's customary to say thank God it's Friday. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam. Guys, hi, good morning.
Good morning. You know, I just thought I'll try this on TV and see whether it works or not. Guys, it's Friday.
Yes, it is.
All right. Yeah, exactly. So basically, earlier was a little confusion and then you gave a bit of a response. That's exactly what happened in the markets as well. First, yesterday, day before yesterday, there was a bit of a reaction, and now there is a response. So yesterday, there was a bit of an uptick in the global markets.
Oh, last night was better.
Sea of green. So I think finally they made up their minds that yes, it's a happy cut, as Prashant called it, right?
It is a happy cut, but you know, I think yesterday the markets here, and I was out and was not looking, but I think yesterday was not a happy situation here in the market, right? Mid caps and small caps, and I think Mangalam was mentioning this yesterday. There was a fair bit of pressure in the broader market. So we'll get to it in just a bit, but let's just sort of take you through what you need to know. Beginning, of course, with what last night threw up. So US markets rebounded and rebounded in a good way. So labor market data came through, jobless claims essentially, which essentially were very low, which is good news. So labor market is strong in the US. That is the indication. So you add the strong labor market, which is the one point of contention for the US Fed. I mean, they don't care about inflation. I mean, they care about inflation, but the big sort of one, if there's one dominating driver, it's labor data. And that seemed to be pretty good. And then you throw in the 50 basis point rate cut. It's, as I said yesterday as well, kind of a very happy situation, best, whatever you want to put it. But it's strong economy and rate starting to come off. That's the backdrop. Now, S&P went up 1.7. Nasdaq was up about 2.5% as well. So that's the US for you. Now, S&P 500 it also, and this is just a sort of piece of information, hit its 39th all-time high of 2024. So that's quite something. 39th all-time high of 2024. This is, I think, we've only had so many all-time highs in a year. Back in, I think, the last time was 2016. All right, dollar index, that was weakish, so about 1/3% lower. 100.69 is where we left off. And it's basically bang in the support zone, which is between 100.42 and 100.79. It's a 20 weekly moving average. It's a 2023 lows. So a break below this perhaps accelerates the downside for the dollar, which is good news for emerging market flows. Swiss franc and yen, these are essentially safe haven currencies. When there is a sort of drawdown, markets are looking nervous. They go up, they were down. Oil prices are back at about $75. So we're not looking at, it's slowly creeping back up, and it's added about $5 quickly in the last fortnight or so. And today we have the Bank of Japan, which will meet for decision, but no changes expected. We'll see what they say about what they'd like to do in the future. So guidance will be important. Nifty yesterday cooled off very significantly from the day's highest level. And it's the same level which I've put out now for the last 10 days. 25,475 to 25,530. It's the end of the ending diagonal on the Nifty. And that is acting as a strong, looks like it's acting as a strong resistance. So in this zone, actually the high yesterday was 25,610 and change. So there was a kind of a throw over, and then the market sold off very steeply. So you need to cross this on the upside because, I mean, index has done very well. The bar goes up a little bit in terms of what it needs to do before we can sort of chart a course even higher. The Nifty must, on the downside, hold 25,120. It must not break it. It's easy 300 points away from where we left off. Nifty Bank continues to outperform the Nifty. It nearly tested the all-time high. Support here comes in at the 40-hourly, 52,345, and in the way up, the high of 53,357. So yesterday, the Nifty Bank almost, I think it fell short by about 4 points, 5 points, almost went to the last all-time high, and then sort of pulled back a little bit. So let's hope, I mean, you're able to cross that sort of meaningfully, and then we look like, we do what the Nifty's done on the Nifty Bank as well. Some chatter, as always is, when you go back to the previous high and the market is not able to cross it in the first attempt of a double top, etc. But I think it's too early. You need to give it 2 or 3 more days because it's only now that the Nifty bank has been able to come up to those levels. 35-point higher start is where the GIFT Nifty is indicating open at lots of individual stocks where there'll be fair bit of action, which we will get to in a bit. Surabhi.
Yeah, absolutely. Lots of green. I mean, continuing the handover from Wall Street over to Asia is actually pretty good because most of the markets are up and about, and we've got 2 central bank decisions. One is done, the other is awaited, and that's Bank of Japan. And actually, we've got some inflation data out of Japan as well ahead of that announcement. Not that it'll have a bearing on, immediately today's decision, but that data is basically telling us that core inflation, core consumer inflation in Japan continues to inch higher. That's something that the Bank of Japan will be very, very mindful of because the numbers for August are at 2.8%. versus 2.7% in the previous month. Nonetheless, I mean, today we're not expecting any moves on the hiking side from the BOJ. The anticipation is the BOJ will probably take that call at its October end meeting and maybe onwards in December. In China, no change. The loan prime rate in China has been left unchanged by the central bank over there as well. Let's look at some of the other key parameters. Now, if we talk about the market this week, then the interesting contrasts are very, very apparent. The Nifty is virtually unchanged. I mean, a gain of 0.2%. It's the Bank Nifty. That sector rotation has been very pronounced this week. And let's see if we get more of that today as well, because even yesterday in a topsy-turvy market, banks were really standing fine. Nifty Bank is up 2% already this week. And the correction in the broader market is very, very clear. Mid-cap index is down about 1% and the small cap down almost 2%. So very clear changing trends brought out by this week so far. Fund flows yesterday. We had a pretty big sell figure from the FII fraternity, 2,500 crores sold. Domestic institutions were a neutralizing factor as usual, buying up about 2,000 crores worth of stock in the cash market. I'm watching for 2 stocks in particular, both on regulatory action, one from RBI, one from SEBI. Now, there's good news for IIFL Finance. Remember, yesterday the stock was down 6-7%. There was a lot of chatter about whether there can be a ratings downgrade, etc. Well, suddenly, it's got a fresh lease of life because the RBI has restricted all the restrictions on the gold financing business, the gold loan business of IIFL Finance. So they can go ahead with disbursals, securitization, sale of loans, all of that. So that should be a huge relief. And this is coming after a whole 6 months. The ban came in effect in March. So good news over there. Axis Bank, this is a bit of a curveball coming through because SEBI yesterday said that Axis Capital will have to stop all its merchant banking activities in the debt market with immediate effect until further notice. It's a pretty complicated issue surrounding the placement of NCDs that Axis Capital had done with a hedge fund or, an outfit which is linked to hedge funds. We'll get you more details as we go along, but let's just see if there's any sentiment negative on Axis Bank because of this. So 2 interesting corporate developments that I'll watch out for. Mangalam, how are you looking at things?
Well, 2 things. One, when you guys were talking about the US markets, the broader markets in the US are doing so well. 7 days of a rally in Russell. And that, is totally different from what our markets were. Earlier, we saw our large caps underperform and our mid caps do extremely well. And in the US, everyone was talking about a very narrow rally. Out there now, the frontline indices are doing what they are. The broader markets are doing extremely well. I was looking at Russell having done 7 days of gains. And that last time that happened was in March 2021, a little before, the rate hike cycle began itself. That's one. And the second thing is Nike. I don't know whether you guys noticed or not. There was a development there where the current CEO has announced his retirement. And
the shares rallied. And I wondered why.
Because the earlier CEO who is coming back, Elliot Hill, is coming back from retirement. Usually in US, when CEOs come back from retirement, everyone goes back to what happened to Apple, when Steve Jobs came back again. And Nike has had it very bad in terms of its strategy and product line, etc. over the last couple of years. The shares have been much lower as well. So change of leadership, change of guard for
Mangalam tracks closely.
Very closely.
All the sneakerheads in our office led from the front by Mangalam.
The last CEO who came back was, before Steve Jobs, was Disney. Bob Iger.
Yes, Bob Iger came back.
3 years back.
And we also keep...
The return of the OGs.
The return of the... even Starbucks, we have the founders keep coming back and there are a lot of leadership changes out there. So to that extent, it was important. But for the Indian market itself, like I said, first there was the reaction and then there's the response. And the response, the Wall Street showed that yesterday as well. A big gain is what we saw on all the frontline Wall Street indices. But apart from that, the GIFT Nifty indicating a positive start is a good thing. 3 things that, weren't so bad in our markets yesterday. The first thing, even though we went off the highs, we maintained levels. Nifty was above that 25,400 mark. The Nifty Bank still closed above that 53,000 mark itself. And the mid-cap index, while we did see a decline from the highs, there was an equal amount of recovery that we saw in the last hour as well, telling you that not all was very bad. Post-event, the other positive was that the India VIX, despite the volatilities that we saw in the market, the India VIX actually declined to sub-13 level, closer to 12.5 itself, after a big rally that we saw in the previous trading session itself. The other positive thing that happened was that the FIIs unwound some of their excesses. So if you look at it, there was a net sell of 924 crore in index futures by the FIs. They unwound about 7,000 long contracts. They added about 7,000 short contracts as well. And as a result of which, their net long exposure, which stood at a hefty 69%, closer to 70%, has come off moderately. The important part, who bought the FII selling? It was the clients. Clients in HNIs who, know the near-term pulse of the market, after being net short, actually yesterday bought that dip. They added 17,000 long contracts as compared to just about 7,000 short contracts. So those are a couple of things that we'll be watching out for. The options range on the Nifty, 25,500 feels like a bit of a fulcrum for the next couple of trading sessions. 25,500 call has a premium of 150 rupees. 25,500 put has a premium of 150 rupees. Those who are selling the call and the put are playing for a broad range on the Nifty between 25,350 at the lower level to 25,650 at the upper level itself. The index, like we've been talking about, to watch out for will be the Nifty Bank, and that's largely because yesterday it went within kissing distance of its previous record high. Can it complete the loop or not is the big question, because it's been a rank outperformer this week and the previous week as well. This week, the Nifty Bank is up 2% at a time when the other indices are actually down 2.5 to 3% of the broader market level. Three stocks that I'm watching out for today. We pointed out yesterday the possibility of Chambal Fertilizers and SAIL getting into F&O ban, and they have gotten into F&O ban. And the other one is Balrampur Chini, which comes out of F&O ban. So those are a bunch of stocks that I'll be watching out for.
Okay, Mangalam, got it. We'll keep them on our radar. Thanks very much for that. Let's kick off the action then with the equity call of the morning. And this one's coming in from Lawrence Belanco of CLSA, who says that while there is still risk of further volatility for global markets heading into the US election, our base case remains for a continuation of the uptrend of the late 2022 lows into the year end. He says from a simple behavior aspect, the Nifty continues to respect supports provided by the 50 DMA post the election volatility back in June. He says while there are still signs of slowing upside momentum for the trend, he would give the benefit of doubt to the unfolding uptrend as long as the price action continues to respect supports provided by the rising 50 DMA, currently at the 24,760 level. Lawrence says a break of the 50 DMA would likely result in a test of the next chart support at 23,898 to about 23,900. But we're far from those support zones. The market continues to cruise along.
Absolutely. And, Lawrence, of course, widely followed as far as technicals are concerned.